we are going to discuss what are the pros and cons of electing mark-to-market accounting. As I stated before, this is a really important concept to understand, and it's not too complicated either. Many traders find this election appealing as a way to make filing simpler, simply to reduce their tax burden, to optimize their taxes. However, as stated before, there's qualifications and a process that must be followed. It's important to understand the process before proceeding forward. There are two major advantages of electing mark-to-market accounting. Firstly, since all positions are mark-to-market, price to year-end market prices at year-end, there are no wash sales to calculate or report to the IRS. If you happen to have a loss from trading greater than $3,000, you can deduct this loss from any other income and possibly amend a previous year's tax return and get a refund. If you're an active trader in securities or commodities with mark-to-market election, in effect for the current tax year, then these are the following benefits. Firstly, gains and losses from all securities or commodities held in connection with your trading business are treated as ordinary income and losses instead of capital gain and losses. Normally, if your capital losses exceed your capital gains, the amount of excess loss that can be claimed is limited by the IRS to $3,000 or $1,500 if you're married filing separately. If your net capital loss is more than this limit, you can carry the loss forward to later years. Now imagine a year where you lost $100,000. How many years would it take to recoup that at a rate of $3,000 per year? With this MTM status or mark-to-market status, the limitations on capital losses do not apply. If you had a substantial loss, you may deduct this loss against all other types of taxable income without the normal $3,000 loss limitation. Mark-to-market accounting provides a type of tax loss insurance, as we often call it, as losses that can be carried back 2 years. This is great news for active traders who may have made a killing for 1 or 2 years only to have a substantial loss the following year. If you have no other income to offset this large loss, you may amend the previous 2-year tax returns and get a refund. No one likes to lose money, but knowing you may have some recourse to recoup some of these losses in case you do is quite comforting. The wash sale rule does not apply to securities or commodities held in connection with your trading business when you have mark-to-market trading status. Like anything, there's always some cons, and mark-to-market accounting is not without some downside. For example, if you have large unrealized gain at your year's end in one or more of your open positions, you're forced to close those positions on paper using the year-end prices, which increase your current year taxable gain. This is true whether you're long or short. Normally you do not realize gains until you actually close your position. So be aware of this at year end if you have elected mark-to-market accounting. You also must qualify and then make a proper timing election with IRS, enabling you to use the mark-to-market accounting method. With this is just understanding that this is very much viewed as a business by the IRS. You're like a trading business. So as long as you show consistency and you can demonstrate that you're a full-time trader, then this would be an excellent option in your case.